It seems local markets are in need of a rescue today after a sea of red yesterday. The JSE slightly paired losses on Monday, with their global peers trading cautiously as investors looked ahead to the latest reading of the Federal Reserve's preferred inflation gauge this week. Let's talk about it with independent analyst Carmen Mpelwane, who will also share a view on what's driving the markets this morning. Carmen, good morning. Give us an overview of what the markets are looking like so far today.
Thanks. Good morning. So we have seen the markets open up down again this morning. I think that's going to be the general theme. One, on the back of the weakened rand, which is maintained post the budget speech last week. But adding on to that, the anticipation in terms of the U.S. inflation number expected out on Thursday. There are some corporate earning numbers that are coming out during the week, but I think the key theme is definitely going to be the concern around what the U.S. inflation number is going to be and whether there will be movement in terms of the interest rate going forward.
Yeah, certainly a massive issue globally, especially here in South Africa recently, given our growth objectives and projections. Explosives then, and chemicals group AECI is expecting a fall in headline earnings per share to be between 7 and 16% low. What's driving that drop?
So you'll keep in mind that there's been a recent announcement around the big restructuring of the group. The focus is going to be on the mining division, and towards that they are looking to divest a significant number of the internal companies. The plan is to take all that money and invest it into the mining division specifically. And that's going to account for about 80% of AECI's total. In terms of the current trading statement, there is a decline in the headline earnings per share, and that's largely driven by an increase in finance costs, number one, and an increase in short-term debt, but that was to buoy the revenue generation that they've experienced. They have said that they expect that there will be an improvement going forward, but they also remain cash generative. Keeping in mind AECI is down 11% so far this year.
Sure. Well, Alron is expecting to report a rise in full-year headline earnings from their continuing operations. They've had a strong year-to-date performance. What stood out for you from those numbers?
So again, a big focus and theme is the restructuring of the division. That's been the overriding theme for this statement as well. So there is a growth in the headline earnings, but that's for continued operations specifically. If we look at the entire group, including those that are going to be discontinued or spun out or sold from the group is going to register a headline loss, unfortunately. We have seen them divesting certain divisions over the last few years and selling their non-core units. And so that trend will continue. An overriding factor that has led to the group headline loss is specifically in terms of impairment that they've seen across one of their big divisions, which is the Nexus, that they're looking to sell as well.
Let's round things off with the SuperGroup. Have their interim results for the 6 months ended 31st December 2023. Those numbers are out. Your overall assessment of that performance?
So again, lots of concern around the fact that although top line has been up, so we saw revenue up almost 12%, this is not filtered down to the bottom. So headlines earnings per share down 16.2% for the period. Largely driven, I think, by, the top line largely driven by the weakening rand, as well as the acquisitions that they've done both in the UK and in South Africa. But if we go down to the bottom, in terms of the earnings numbers, the concern there has overriding been in terms of if we look at the supply chain division specifically, there's been a decline in volumes as well as the impact of the backlog at the ports. On the European side, they look to continue for their cost rationalization program, and that positive impact unexpected in the coming periods. So again, not probably the best results as it stands, but the market we have seen the stock open up 1.6% this morning.
Thank you very much, Carmen Mpelwane, for a look at the markets and what's driving things domestically and abroad as well. We hope for more positive energy in the markets, and we'll see how those shares perform tomorrow morning in another economics update.